3. We're officially live again. Here we go back this Thursday, coming to you live from the Doral office. My name is Ernesto Vega, broker of Campbell's Real Estate. And this Thursday, I have the honor to have the Intergalactic Regional Manager for the Vista Prime Group, CMG, the one and only linebacker, Mr. Ruben Crispino.
I think I played tight end or offensive
You were a
lineman.
tight end? Okay.
Tight end. Yeah. Yeah, we won. That's all
You
that
won?
matters.
Okay.
And I'm
That's all
still
that
here.
matters.
And I'm still here.
And a lot of Advil after the fact, right?
Yeah, I'm still feeling the hamstrings. They're a little tight.
All right. So last week, Ruben, Aniba from your team, we had a format where we talked about loans that are available for self-employed people, right?
Mm-hmm.
So there are a lot of self-employed people in South Florida, and so it was a great sort of program that we put together. There's a lot of questions that were submitted, and so since it works so well in English, in Spanish, I said, well, let's try it in English. So I have the I kept the same questions that were sent to me, and so let's dive into it. So South Florida has, Ruben, a majority, and I think I have the data. I think it's 30-something% of people in South Florida are self-employed, which means they own a business, they work for themselves. They're entrepreneurs. We're a very entrepreneurial area. And a lot of people feel that because you're self-employed and you may report taxes in a interesting way, there are no loans available for those type of buyers. So can you give me, because I have other question, an overview on what are self-employed loans?
As always, thank you, Ernesto, for having me on. Love our weekly chats here, and I think they're very beneficial to all of us. So self-employed person can be somebody that even receives a W-2 from one factor or another. They can get 1099s. They can be your stereotypical, self-employed person that has a Schedule C. They can do a S corporation. They can be a C corporation. There's so many aspects and possibilities regarding what's considered self-employed. So it really covers a lot of people. If I can just kind of give a brief overview of these type of loans, these loans are called as a group, we call them either non-traditional or non-QM. QM stands for qualified mortgages. And what's happened more recently, these mortgages and these types of mortgages have been around a long time. But what's happened recently is that the market, Wall Street, likes them. So we've been able to package them and sell them kind of like what we do with other normal loans like conventional FHA and VA. And what has happened with that are two things. One, you package a loan with other loans, it really just minimizes the risk or dilutes the risk, better said, and you can get better pricing. So the pricing on these has really gotten closer and closer to our standard loans, and that's why they're so attractive now. Makes a lot of sense to go this route for many of our buyers. Us at CMG for a long time, and we still broker some of these loans out. But the majority of what we do is our own CMG non-QM loans. And the benefit to that is obviously we control the whole process. It's our underwriting, it's our guidelines, and more important, it ends up being cheaper for your customer because they don't have to pay points up front. They can, but they don't have to. On most non-QM loans, the buyer typically has to pay points up front as part of the broker's deal. So that's a huge benefit that using one of the CMG in-house non-QM programs gives you.
Okay. Are these loan programs available for self-employed buyers? Are they your traditional conventional loans, or are there also FHA or VA loans available for these?
Well, just for the record, anybody as self-employed can do a standard conventional FHA VA loan, no problem. They just have to qualify through the traditional process. We do many loans that are conventional or jumbo, whatever it may be, for self-employed people. But we need full documentation on those loans. And what that means is we need tax returns, W-2s, 1099s, what have you, for that particular type of loan. What we also have is for people who don't, like you mentioned earlier, don't indicate a ton of income or are very aggressive on their deductions on their tax returns. Those are what we're talking about other non-QM loans. So yeah, these loans are amazing. They really take away the burden of having to prove income for a lot of these borrowers.
Okay. Um, does this type of loan exist for jumbo properties, for jumbo loans?
Yeah, absolutely.
Okay, so can you explain what is the threshold now for what's considered a jumbo loan? Since FHA has raised their number, conventional has raised their
I
number.
know. I got
What
it around
is
here. It's 800
what
and
is a
change
jumbo?
I have it written down here because I can't remember all the time. So here we go. Jumbo conventional is 806 500. So anything on a single family, right? It changes if it's a duplex or a triplex. But a single family, the current number is 806 500, and on FHA is 654 350. So anything above that would be considered a jumbo loan on a single family
Okay,
or single purchase.
that's the new jumbo standard. So then
Yeah.
these type of programs do exist for jumbo loans.
Oh, absolutely. We use them a lot for jumbos or because again, a lot of people who are doing jumbo loans or happen to be self-employed.
Okay. How about if you're a veteran and you want to do a self-employed loan, can you do a VA loan self-employed or no?
Absolutely, absolutely. And there's a high balanced VA loan also. That's kind of the VA jumbo, um, I guess, product.
Okay. Um, what are the key benefits of using these type of programs? Like, like what are rates like in these type of programs? Is it
So,
like a
kind of,
higher premium or
yeah. And again, if it's self-employed that we do traditional, like you mentioned, VA, FHA, or conventional, there is no difference. It's the same. It's the same as it would be. They just happen to be self-employed. On the non-QM loan, yes, there's typically a higher interest rate, but like I mentioned early on, these rates are getting closer and closer to the traditional loan rates because we've been able to uh, to sell these loans now in the secondary market, but they usually do require higher down payment. Credit scores, there are requirements like everything else, but they're really not significantly higher than the regular loans. The bigger difference is just on down payment. We don't have 3 or 3.5% down on the non-QM loans.
okay. How about income verification? If you're self-employed and you're entrepreneur and you run two businesses, you sell on Amazon and are an insurance agent at the same time.
Mm.
Um, how do you verify that income? What are the guidelines for those self-employed income verification? Is
Well,
it
there's a
bank
couple, right?
statements that you look at, or what do you guys look for?
So we do. We look at bank statements. We can do one of two. We could do either their personal bank statements. Typically, depending on the program, we're going to ask for either 12 months or 24 months of personal bank statements, or we can also use their business bank statements. Again, 12 or 24 months, depending on the program. And what we do is we determine their income based on their deposits. So the deposit they've been making either on their personal or on their business bank statements. There are some factors that go into play regarding expense ratios. On the personal bank statements, there's typically not a factor because obviously the money's already been taken personally. So that's a little easier to do, the personal bank statements. The business ones, there is an expense factor because in theory, that's not all income, that's just revenue. Then you come up with an expense factor to come up with a true income. They're both, again, every borrower is going to be a little different. We need to analyze what will be best for them, what they can do. Uh, Things that are in play are how much of the ownership they have in the business. If they have 50% or 100% or 25%, it all matters. So really, it's a complete overlook at their situation. We even have programs for 1099 buyers, which we can just use a 1099. So plethora of programs for anybody who's looking to purchase a home that is doing the self-employed and maybe not indicating all their full income or taking very aggressive tax write-offs.
Okay. Okay. All right. any perks for specific professions that you guys have? Any perks for someone that is, a dentist,
Mhm.
self-employed dentist, runs his practice, he's owner operator, all in one. Are there any programs for any specific professionals like that? Or
We
like,
do have
there's in South Florida, there's a lot of independent nurses that sort of, you know, uh, offer they work by themselves and they have their own clientele. For
mhm.
that medical field or any other field, any specific programs or benefits or perks?
We do have a doctor program, a medical program that we have. Again, it depends on the situation of the borrower. Your example of the nurses or healthcare providers that work multiple jobs. We do that all the time. Typically, they get paid either multiple 1099s or multiple W-2s or a combination of 1099 or W-2. Again, there's programs for all of them. We just have to analyze and see which is the best one for them. Like I always say, we don't make any more or any less money depending on the program that we put them. We just want to put them in the program that, number one, most importantly, we can close, and also that's best for them as far as rate. But there's programs for everybody.
Okay, so not you mentioned that, and that's one of the questions I'm being asked. Ruben, isn't it just better to do a DSCR loan than to try to do a self-employed loan?
Well, the DSCR loan is only for investment property. So that's part of it. It has to, in a DSCR loan, it has to be an investment property. It can't be on your primary. So that's the first problem, right? So, but yeah, it can be even easier to do a DSCR loan if they're buying an investment property because the DSCR works wonderful. You don't need very much documentation as long as the potential return on a monthly basis from the property that we're purchasing or refinancing. We can do a refi, DSCR refi also, as long as that basically covers the mortgage on a one-to-one basis. Again, we have some programs that can be 80.85 to 1 or even a little bit above it, depending on which program. We even have programs on DSCR for foreign nationals, right? Foreign nationals are own a home in their particular country. They're obviously buying an investment property here. It's not considered primary. So we have a foreign national DSCR, which we're using quite a bit. So that's the difference between the DSCR. On a bank statements, typically we're talking about primary. We can also do a bank statement on an investment, but typically that's we're using a primary, and DSCR we're talking about investment property. So some of the fun stuff that we have going on now that's different is that we really have a plethora, like I keep using that word, of programs, right? Because some people are just missing out, right? They're just barely missing out on being able to go through, let's say, a standard conventional loan. So, we have a non-QM called non-QM prime, which is for those kind of people. There may just be one thing or another in their credit profile that's not allowing them to go through the traditional route. So those kind of borrowers, they'll get a benefit. Maybe we can do a lower credit score for them. Maybe it's a less down payment. Typically on those, we even have one that's a 90% loan to value on a non-QM loan, which is pretty unique, right? 90, only 10% down. And then also, it depends on the documentation. Then from there we go on. So we have like the prime, the sharp, the edge. Those are all in-house CMG loans depending on the borrower situation, whether they're just missing out on a traditional, whether they have a bigger hill to climb per se, whether they're foreign national, there's a program for them. Really, like I say in all these conversations, there's a program for everybody. Okay, and we're getting more and more of these non-QM opportunities because they're becoming more and more attractive when it comes to rates and guidelines.
Okay, and before I jump to the next topic, Ruben, which is down payment assistance, um, is there are there QM loans for investment properties? I have my house, but you know what? We are all heading to Century Village, so I want to buy an investment property before I get to Century Village. And I'm self-employed, and I already have a primary home. Can I use one of these non-QM or whatever type of loans to buy an investment property?
Oh, absolutely. I mean, again, we can go the DSCR route, which is very easy to do for the most part, requires much less documentation, or we can go a traditional route on an investment property if the borrower can document their income, or we can better said we can document the borrower's income based on the information they're giving to us. We can go a conventional loan on an investment property. Remember the FHA and VAs are for primary only. You can buy a duplex, triplex, and fourplex with a FHA or VA, but you do have to live in one of the units. So we can definitely do a conventional, traditional loan. We can do a DSCR loan on investment property. We can do, again, multiple ways to get the borrower to get their property that they're interested in buying.
Okay, so then now we're gonna switch the topic and we're gonna go into down payment assistance. But before we go into down payment assistance, I think I shared with your team and I share with my team and I share with everybody. In February, 32% of all listings in the MLS had a price reduction. That's huge, which means sellers are now more motivated than ever. So I just want to preface at that before I go into down payment assistance programs and all of that stuff. So Hometown Heroes is dry. They're trying to add more water to the well. They say they will. We don't know when. So at some point in time, there'll be water in that well. But that doesn't mean that there are no down payment assistance programs for buyers, right? Now, first question, down payment assistance. Is it only for first-time buyers?
So typically, yes. It's for first-time home buyers. The Hometown Hero program that you're talking about is for first-time home buyers. Remember, though, that you're a first-time home buyer. You can be a first-time home buyer more than once. If you haven't owned a property in 3 years anywhere in the States, then you're considered a first-time home buyer. But yeah, for the most part, the down payment assistance is for first-time home buyer. Yeah.
Okay. So it's primarily for first-time home buyers. Um,
Not 100%, but mostly, yes.
so with the programs out there, are there programs that are by lenders, by city, by county? There's a lot of confusion out there and unfortunately a lot of misinformation. These are, I
Absolutely.
assume, they're different programs, right? There's different, like I said, cities and counties and lenders have them, right? Everybody has their own down payment assistance.
So not including lenders, in the state of Florida, and I'm going to get this number not exactly correctly, but in the state of Florida, there's 193 down payment assistance programs that are municipal based. So it may be 190 and maybe 200, but somewhere in that range. That's how many down payment assistance programs. Majority of them come from the municipality, whether it's the city, the county, or the state, right? Hometown Hero is a state program. There's a DPA program in Hallandale. There's a DPA program in Boca Raton. There's a DPA program in each individual, and you can combine them. You can do one, for example, in Hallandale with one in Broward County. So it is a lot out there. We cannot be experts on 193 programs beyond the ones that CMG offers. So we pick and choose the ones that we feel that are most beneficial to the borrower, right? We want to put ourselves in the borrower's shoes and empathize and see what is best for them as far as qualifying. Okay, because qualifying is important. Sometimes these programs are so difficult to qualify for that you end up spinning your wheels. So we try to use our experience with them, and obviously, we've been around for ever, seems like. And so we have quite a good experience with down payment assistance programs. I go back to my point that as a true lender, one of the top 5 lenders in the country, we offer these down payment assistance programs unabashedly to our clients. So a lot of other lenders will tell you no, they don't qualify because again, the compensation to the loan officer or to the bank or the lender is usually less. So they won't do them for that reason. We don't care. We want market share. We want to make our borrowers happy. We want to do what's best for them. So they come back to us when it's their second purchase and third and fourth and send us all our friends. So keep that in mind. If you're using another lender that's not a full-fledged lender like we are, they may tell you your borrower doesn't qualify for DPA based on their own pocket, not necessarily the truth.
Okay. Income limits. I know that there's income limits. So there's income limits on the cities and counties, but not on the lender like CNG's programs, right?
That's again, that's where we're kind of getting into the weeds there a little bit. There are income limits, and typically, just in general, going to go over because some don't have income limits, and they differ by program. But what they typically use is called household income. So let me give you an example what household income is. If you have a person that's one person's buying it, and we're using their income to qualify, however, their spouse or significant other, somebody else that's going to live in that house also earns income even though we're not using them all alone, their income will be added to what's called the household income, and therefore that may make the income limit, uh, you cross the income limit on that down payment assistance program if there is one. One that we kind of run into a lot because we typically know if there's a spouse or a significant other of their income. One of the issues that we have that we try to knock out right away is like grandma, right? So let's say they're buying a house and they qualify based on income limits, but grandma's going to live with them, right? And grandma has some social security income. That income, while not used to qualify, could could be used as far as the household income for determining whether or not they surpass the income limit. And every area has its own like different way they look at it, so it's hard to give you a specific amount.
Okay. Okay. So they are, but it depends, right?
Yeah, the rule to everything we do in this business, it's all the answer is always depends.
Yeah. So credit score requirements.
Pretty standard and typical stuff, you know. We have a couple FHA programs that we can go down to 580 on credit score wise, conventionals, you know, 620, 640, depending on the program. They're all a little different. And some of them require a little higher credit score to qualify. Um, some are forgivable seconds, some are non-forgivable seconds. Again, we in order to make this work, we have to sit down with your buyer, and if they're going to use down payment assistance, we have to have an idea where they want to buy. And that's important because, you know, we've had situations where one property qualifies for down payment assistance and the property across the street does not. You know, so we got to keep that in mind that it's a big analysis. We need the address. We need to put it in the system. It tells us whether they qualify or not. Now, this particular topic that I want to cover real quickly is not down payment assistance, but it's called the community lending program that we have. And what it is, and especially of you that have listings that are hard to sell right now, we've talked about the list and lock before, but we also have an amazing program called the community lending program. And that program is also based on address. So if you have a listing, it'd be great if you got with us so we can check and see if that listing qualifies for the community lending program where any buyer who buys in there that uses us will qualify for a lower rate without doing the list and lock. It's really an amazing product that we have now. I know we're working to send out a brochure onto those listings as we go through them.
Okay. Next question I was just asking anybody in the chat who here had a listing. So next question I had, Ruben, was so potential downsides to these type of loans, to these type of grant loans.
There's rules and regulations, right? So again, they're all different. Some of them require you to live in the property for 3 years, or that, you know, whatever assistance they gave you comes due. It just depends. One's 10 years. After 10 years, the amount is forgivable. So yeah, you have to read very carefully what you're signing so that you know what your situation is. If you're going to be in the property for, you know, 20 years or so, there's typically not a down part. But if you're going to be there a short time, you have to understand that some of them are not forgivable. So you do have to pay it back once you sell the property or refinance.
Right. They're asking me to ask you, what's the difference between a loan and a grant?
Very good question. But the answer is pretty simple. A loan is something that has to typically be repaid, unless in the loan document says that the loan becomes forgivable. A grant is kind of a gift. So a gift typically does not have to be repaid.
Okay, but I assume that the grant comes with conditions.
Everything comes with conditions.
Okay. All
Yeah,
right.
there's conditions. You gotta know, there's just so many of them, Ernesto. I mean, right now, I think when we did the event in Sawgrass, we talked about our FHA down payment assistance program, that's CMGs. I love that program. It's pretty simple to understand. There are some conditions, but again, very simple. They're not convoluted. So we have that. Again, I think that what we're seeing, right, as inventory increases and you're starting to see the listing prices being cut a little bit, like you said, 30% had a price drop. I think while we always talk about buyers, I think we need to flip this and start looking at our listings and see how can I make it more attractive? How do I sell my listing, right? How do I move it? And the way you move it is by knowing what you can offer, and that's what we're here for. We're to show you, hey, Give me your listing. Let me see what we have that can be attractive to your buyer. So now your listing is more, kind of, it's a difference, right? It's a differentiator between your listing and the one next door.
Okay. So I know we begin to run out of time. So from what I'm listening to you, the benefits that I'm grasping for the down payment assistance is lower out-of-pocket costs, right? So the buyer has to come up with less dinero.
Absolutely.
Okay. Um, because they have this capital, this also means that they could qualify for a little more because they don't have to put as much money down and they can put more money towards closing costs. So it means that maybe they were qualified for 450, now they qualify for 500, 550, which gives you more exposure. So am I right so far?
Yes, you are.
Okay. And this also takes away the pain or the time, because time to me here equals pain for first time home buyers to wait. Because they're like, okay, if I'm saving, 700 bucks a month, I need to save $30,000. It's gonna take me 4 years to renting to get to my 30 grand to put down my down payment.
Right.
So I can sort of speed up that timeline by getting a down payment assistance, and the cost may not be so much that I don't have to wait 4 years, literally just throwing money in the garbage.
Exactly. The reality is that, and again, we got to be realistic, right? Can this person actually qualify for that down payment assistance program that they want? Just because they want it doesn't mean that it makes sense for them, right? We got to educate them on what the options are. If they, need to move in, 30 days, well, then you got to get going on that, right away. Again, and kind of start narrowing down where they want to be. Whether it's down payment assistance, where there's our community program that we have, location, it matters, okay? Location of the property that we're going to finance. Because of the community program that CMG has, basically we're giving back based on CRA. Uh, and that's kind of what we're trying to go through, any of the listings that any of the canvas agents may have and determine whether that listing qualifies for that.
Okay, so 2 minutes. I got one question that came in. What final tip do you have for any sellers to attract more buyers this weekend?
Well, I think it's that. I mean, why wouldn't you? Why wouldn't you know whether your property has an advantage over others based on what it qualifies for? Whether it's a community program or not, what down payment assistance programs are in the market. As a realtor, you should really know that. If you have a listing in Hallandale, well, do you know that Hallandale's got an $80,000 DPA program? Well, maybe your property qualifies for that. It's very important to do that. For this weekend, I would discuss that. Also, we talk about the list to lock all the time. So if it doesn't qualify for whatever reason, we also have the list to lock where you're actually buying down the rate permanently for a borrower, which is going to be a bigger savings than lowering the price. It hurts my feelings when I hear that they're all lowering the price, when quite simply they should just be buying the points down, buying the interest rate down as opposed to lowering the price. It's cheaper for them and it's better for the buyer. So I think that's the advice I would give them. Know more about the financial possibilities in the property you have listed.
Yeah. Well, Ruben, man, I gotta thank you. I mean, the insight that you have shared about these two components, which are huge in the South Florida market, from self-employed buyers to down payment assistant. It's a great educational course. Thank you truly for taking the time today and sharing this with everybody. I'm keeping this in our private Canvas group, so if you missed it, you can watch it later. Ruben, best way to them to get a hold of you now or later? Because I'm telling everybody that's listening that there are so many, like I said, there's 100+ programs available. So buyers that need assistance, the money is there. You just gotta sit down and have a consultation with Ruben or anybody from this team. I see Gator and Leo on the call today. So best way to get a hold of you so you can assist them, Ruben.
So honestly, just like Michelle says, it's my cell phone number, 954-661-2790. Ernesto just put it on the chat. I always return my calls. I may not answer if I'm in the middle of something, but I call you back or text me, either one, whichever one works best for you. I'm also on WhatsApp and I'll be happy to return your call on there also.
Okay. All right. So We went a little bit over. My name is Ernesto Vega. Once again, if you're watching us on social media, thank you so much for jumping in and listening to Ruben's Insight. We're here every Thursday for 30 minutes trying to educate everybody so you can get more deals done. That is it for me. Have a fantastic rest of your week. Have a great Valentine's weekend, everybody. See ya.